We've now entered phase 2 of Bitcoin's bear cycle, but gold selling off could save Bitcoin and trigger a reversal. So let's jump in. Hi everyone, I'm Paul with ArcisFX. Stick around until the end for this week's key levels to watch to inform your trading. But first, Bitcoin has given us confirmation that it's entered phase 2 of its bear cycle. But this Bitcoin versus gold chart suggests a reversal could be imminent for Bitcoin. But will it be enough? So the first thing to understand is that support is already starting to break here a little bit with a wick. Now that's not enough to invalidate this pattern, but we do need to keep an eye on this level here, which is essentially around 16 on this chart. This is a 3-day chart. Now the most important context here is the Bitcoin to gold ratio, which is currently sitting at around 18 to 20, which is near multi-year lows compared with its usual range of 20 to 40. Now this means Bitcoin is relatively cheap compared to gold, and when that happens there is typically a correction to normalize the Bitcoin and gold ratio. So because it tends to correct, Bitcoin could rise now while gold stays flat or falls, and because metals have been selling off recently, this could give Bitcoin an extra boost. But why would it? Well, firstly, when gold falls, typically investors are moving away from these safe haven assets, and capital can start to then flow to more riskier assets like Bitcoin, which you can look at as a secondary reserve asset to gold, creating potential bullish momentum for Bitcoin. Now, of course, this is very dependent on macroeconomic factors, the dollar strength and market sentiment, and I would encourage you to check out James's content for more in-depth analysis of gold and metals to fully understand the context here. But if investors now do start to pivot following some pretty epic run-ups for gold and some of the other metals, we could see that money flowing into Bitcoin, which could save it from a deeper bear market. But let's quickly touch base with this chart and this pattern. And so this is a bullish butterfly pattern, which essentially is made up of X, A, B, C, and D. And D is the pivot point, essentially where the pattern completes and we have a reversal. Now you can see here this is historical support as well for Bitcoin versus gold and resistance. So this is a key junction point, a key pivot point. So if you're one of the people who thinks that Bitcoin's bear market is going to be short-lived due to institutional adoption and people looking to pivot into these assets as economic conditions improve, then this is the chart you need to be paying attention to. Now, there's obviously a possibility that Bitcoin versus gold could head all the way down here for an extended period and then reverse, which would then support a longer bear cycle narrative for Bitcoin, meaning we could be looking at a reversal approaching Q4 as opposed to H2. But this is definitely a pattern you should be paying attention to, in addition to, of course, the basic TA which we're seeing from Bitcoin, which we'll now have a look at. So this is Bitcoin monthly Bollinger Basis cross. Now at the start of the video, I said that Bitcoin had entered phase 2 of its bear market. So what does this mean? So this is 2018, and when the price action crosses below this Bollinger Basis line, this blue line, we see continued downside for Bitcoin and another significant sell-off, which based out on the weekly 200 MA, this orange line. So this is phase 1 of the bear market, and this is phase 2. This happened previously in 2014 and again in 2022, which of course was the previous bear market before this one. And once we had the confirmed monthly candle body close properly fully below the Bollinger Basis line, Bitcoin's price action then continued down until we hit this yellow line, the weekly 350 MA, and that's what then kicked off the reversal and the beginning, the most recent bull run, which began in 2023. And here we are again. Just at the end of January, had a candle body close now in its entirety below the Bollinger Basis line, which would suggest a move back down to this, at the very least, this orange line. And the orange line essentially sits at around 57K. The other important thing to recognize is that the previous bear cycle, this candle body close occurred in April, whereas this one is now occurred at the end of January, the start of February, supporting the narrative that we were just discussing that Bitcoin could have a quicker, faster, shorter bear market and then bottom out earlier than we did in 2023 for a strong recovery in H2. And the other argument for that is also the previous bear market essentially started to bottom out at what was the previous bull market's all-time high. So not the 2021 bull market, but the one which came before in 2017, where Bitcoin peaked at around 19K, and that was essentially the bottom of the 2022 bear market. Now, if that history repeats and our current bear market bottoms ultimately approaching the all-time highs of the cycle preceding this one, that would be the 2021 top, which was 69K. Now, right now, Bitcoin is approaching that zone between 74 and 69K, and we could start to see a bottoming in that zone. And then if gold continues to sell off, that could be the support Bitcoin needs to bottom, and it would also be supportive of previous historical trends. Now, the reality is also just got to notice that, of course, the 2022 bear market did dip a little bit lower than the previous top in 2017. So even though the previous cycle top was 19K, Bitcoin actually bottomed out at 15K, but it started to slow as we approached that zone. If history repeats itself, we could see Bitcoin starting to slow down and bottom around the 74 to 69K range, dip a little bit lower, maybe to touch this weekly 200 MA, the orange line, and around maybe 60K, 59K, that sort of area, and then reverse. So just a move back down to this area would be quite a modest retrace for Bitcoin on the back of a very long but muted bull run thanks to a lot of macroeconomic conditions. And if metals continue to sell off, then we could see all of that rotate into Bitcoin, which supports, of course, the shorter, shallower bear market narrative, which we could see. Now, does that mean it's going to happen tomorrow? No. What it could mean is over the next couple of months, we see Bitcoin finally bottom out. And as Bitcoin bottoms out, we could then see altcoins starting to find their feet also. And then as we approach H2, everything should line up, and then we can have a move up from here. And therefore, I think that we can expect this bear cycle to be shallower, to be faster, and to bottom out quicker than we expect, which means this bear market could be over sooner rather than later. And if the Bitcoin versus gold ratio does also start to correct, that supports that narrative. So lots to pay attention to, lots of angles, lots of factors. So based on this, the bear market could be over sooner than you think, and Bitcoin could soon be ascending higher on the back of the capital flow moving from gold and into Bitcoin.
Hi there, I'm James. I'm the founder of ArcisFX. I'd like to personally invite you to join our 24/7 trading group. This is built for traders who want an edge. Inside, you'll get access to live calls on Forex, commodities, crypto, energies, and metals, along with exclusive daily analysis designed to unlock your trading potential. And this in both traditional and now in digital markets. I'm talking Bitcoin, crypto, altcoins, and tethered currencies. You'll gain early access to insider news, real-time updates, real-time support, and premium educational content. If you want to sharpen your skills and boost your success rate, then join me and Paul in this community. This is a fast-growing community of traders who are now writing their own success stories. So don't wait. Join up now. Your edge starts right here.
But let's now check in with key levels to watch this week. So this is Bitcoin 15-minute chart, probably the most appropriate time frame to be viewing the current price action because we're now looking for signs of a reversal. So Bitcoin bottomed out at 74.5K, which is now acting as local support to the price action, with major support now below between 69 and 72K. But this whole zone is a support zone, which is essentially made up of previous all-time highs from the last bull run and then subsequent attempts to break that back in March 2024. So this is a very significant support zone. And even though Bitcoin has managed to flip the 200 MA on the 15-minute chart, that is hardly the most significant of the 200 MAs. As an example, the daily 200 MA is, of course, much more sturdy support and resistance than the 200 MA on the 15-minute chart. And this, of course, highlights that above the current price action, we have local resistance at 79K with major resistance overhead between 81 and 82K. So in order for Bitcoin to progress higher from here, we need Bitcoin to break above 79K. That will be the first signal we'll get as traders of a potential reversal. And then if Bitcoin can then surpass 81 to 82K and flip that level, essentially to get back in the trading range we were in December and early January, would be the second bullish signal. And once we see those, we'll start to see people not just entering Bitcoin positions, but also entering altcoin positions as well. But those are the two signals we need to watch. And if we don't see them, we have to presume more downside. And if Bitcoin can't make progress from here, this entire support zone made up of local resistance and major support are all in play. But those are the key levels to pay attention to this week. But that's it for now. I'm Paul with ArcisFX. Don't forget to like, subscribe, and leave us a comment. And I'll be back on Thursday for my weekly crypto live stream. But also don't forget to check out James's Nat Gas and Silver Focus video from early in the week. It's a great one, especially with what's happening with metals at the moment. And also, if you're not already in our private group, you can check out the link in the description, as we'd love to have you. And as always, say no to FOMO.